We're going over to Zimbabwe now, where Itai Chirume, he's standing by for a Zimbabwe market update. He's the executive director at MMC Capital. A very good morning to you, Itai. Now, looking at the industrial index, it's shed about 1.681% on a week-on-week basis, really due to selling pressure from EcoNext as well as Delta.
Yes, sure. I think the market has been under pressure in the past week or so. The most liquid stocks happened with Delta and Econet, and the tendency is where there is need to raise money, investors naturally find favor with selling Delta and Econet. I think these two arguably account for 80 to 90% of the liquidity of the Zimbabwe Stock Exchange. So it's easy to sell these when you want to raise money. And in the past week, we've seen Delta come off 3% for about 65 cents. And Econet share off 1% to 416 cents. INSCO has also been slightly under pressure, and the three of these stocks account for just over 43% of the industrial index. So that's why the index has been under pressure in the past week.
Now, looking at the Zim mining index, also under pressure, but that's really driven by a Rio Zim, which fell about 11.1%. Your thoughts on the type of activity we are seeing on Rio Zim?
Yes, well, Rio is an interesting one. I think it's really the debt issues. An attempt has been made and it's been recapitalized, but I think there's still an overhang of issues from the old times. So with a 23% weight on the mining index, it still accounts for a huge liquidity in the trades in that index. And incidentally, the past week has also seen it under pressure. So the decline in the index of about 2.4 is largely a result of the decline in the price of Rio by about 11%.
Now, looking at some of activity on the company front, we had African Sun acquiring shares in Dawn Property. Now, that will be representing about 12% of the issued shares in Dawn Properties. Your thoughts on this acquisition? Yes,
if you remember, I think on the 1st of June, we did mention that 12% shareholding in Dawn had changed hands. We speculated then that AfriSun was the likely buyer of these shares because there's been a dispute where Dawn Properties has sought to evict African Sun from 8 of its hotel properties, and this includes their cash cow in the resort town of Victoria Falls. That's Elephant Hills Hotel. So at all costs, AfriSun couldn't afford to have this happen. The case is now before the courts. So naturally, as a defense mechanism, AfriSun needed to boost their shareholding in Dawn Property so that they could probably defend their position and protect shareholder value. So they've increased their shareholding to just under 29% now. It will probably entitle them to more representation on the board, and I'm sure they're better placed to fight the eviction when they have board representation. So that's what's happened between AfriSun and Dawn. So the expectation going forward is this issue may take a new twist, with African Sun defending its position from a better place that's on the board than to be, fighting it out in the courts of law.
Now, let's look at the macroeconomic picture now. The World Bank forecasts a slowdown in global metal prices. This is likely to affect Zimbabwe's economic growth rate going forward, particularly in 2012. We know that Zimbabwe's exports to China amount to about 20% at this stage, up from about 5% a few years ago.
Yes, true. I think 12 years ago, 5% of Zim exports found their way to China. 10 years later, that ratio has increased to 20%. I think this is because of the Look East policies that have been implemented in Zimbabwe. China has become an all-weather friend. So two things are happening here. We've been increasing our export ratio into the China market, and China has also been consuming a huge portion of world metal output. I think that's estimated by the World Bank to about 43%. So you see, any likely slowdown in China would mean a deceleration of demand, and with exports accounting for a huge share of Zimbabwe's GDP, it means that a slowdown in demand from China would affect our export proceeds in Zimbabwe. And with Zimbabwe relying to a large extent on mineral exports, it means the economic growth that was projected may be a bit under pressure. We're expecting 15% growth in mining, we may see a slight decrease from those figures because of this phenomenon.
We'll see a decrease in that. Thank you so much for joining us, Itai. It's Itai Chirume, he's Executive Director from MMC Capital, joining us on the line from Zimbabwe.